Hey guys, welcome to part 2 of the video. In this video, I'll be sharing with you my options trading plan for the upcoming week. So this is just a disclaimer. You should only trade options if you fully understand the risk involved. If you're new to trading options, you can always paper trade using the Thinkorswim platform first. So compared to the video in part 1, the trades in this video are relatively shorter term in nature, where I find trading opportunities in the market from a more technical perspective. For me, I'm not a scalper or day trader, so my short-term option trades usually last for a couple of weeks to a couple of months. And because my option trades are for the shorter term and I don't intend to hold them for the long run, I don't really care if they are fundamentally sound or good company. As long as the technical setup and opportunity is there, I will take the trade. So this is a very different approach I take for my options trading as compared to my long-term investment portfolio. So coming back to the options trading plan, over the last couple of weeks, many of the tech stocks have corrected quite a bit. Some of them have held on pretty well, and their uptrends are still intact. There is a chance that some of the tech companies might revert back up. So in this video, I'll be sharing with you 3 short-term trading opportunities that I have identified for the upcoming week. For the first opportunity, it will be a slightly bullish trade on Microsoft MSFT. The 50-day moving average, which is the line in blue, has been quite a strong support level for Microsoft over the last couple of weeks. Microsoft is one of the few tech stocks that held up pretty well despite the recent tech correction, and the upward trend is still intact. In the near term, prices are likely to move around the 50-day moving average and hopefully going higher from there. So in this particular opportunity, I actually already entered a position right when the market opened on Friday. I opened a diagonal spread with the long call expiring in June, which is 3 months away. The short call is the $240 strike expiring on 1st of April. So next week is a short trading week. Friday is a non-trading day, so you guys need to be aware of that. For this diagonal spread, I intend to roll the short call for as long as the price is still within the trading range. I have both a profit taking and also a cut loss exit plan. For the profit taking plan, if prices shoot up significantly, I will either close the short call or close the entire position. And for my stop loss, I intend to close the entire position if the price of Microsoft breaks below the $225 level, or if I hit 50% of my max loss for this diagonal trade. So the $225 should be quite a strong support level for Microsoft. The 100-day moving average, which is the line yellow, is at $225, and also this was previously a strong resistance level, which will very likely become the support level. So this is my trading game plan for Microsoft. So just another reminder, you should only trade options if you fully understand the risk involved. Please don't follow blindly if you don't have a proper exit plan in place. If you're new to trading options, I would really recommend if you start paper trading in the Thinkorswim platform first. Moving on to the next trading opportunity would be Apple. So as compared to Microsoft, Apple has corrected quite a bit over the last couple of weeks. Prices have actually broken past the 150-day moving average, which is the green line, and sitting on the horizontal support line of around $120 for the last couple of weeks. But overall, the uptrend is still intact. I have not entered any positions on this yet. I am still waiting for a bullish signal, hopefully if there's one next week, and I will likely take a similar trade with either a diagonal spread or bull call spread. So moving forward, the 200-day moving average, which is the line in red, is likely going to provide a strong support. So if I do enter a position next week, I will likely cut loss if the 200-day moving average is broken, or if it reaches 50% of my max loss for the trade. But we shall see what happens next week. So the third opportunity that I'm monitoring closely for next week would be Zoom, ticker symbol ZM. So likewise, Zoom has been hit pretty hard with the recent tech correction. On the daily candles chart, prices have broken past the 200-day moving average, which is the line in red. the correction looks overdone and prices are likely to remain range-bound to slightly bullish. If you look at the weekly candle chart, prices are currently supported at the 50-day moving average, which is the line in blue, but I'm not too sure if this will hold. I have not entered a trade for this yet, but if prices continue to hold and there is a bullish signal next week, I would also likely enter a diagonal spread for this trade. The $275 price level is likely going to provide some support given that it was previously a strong resistance level. So if I do enter a position next week, I will likely cut loss if the prices fall below $275 or if it reaches 50% of my max loss for the trade. Again, we shall see what happens next week. So that's pretty much my trading plan for next week. I hope you have found both of my trading plan videos useful. If you have any questions or suggestions, feel free to leave them in the comment section below and I'll try my best to answer them. If you have enjoyed watching the videos, I would really appreciate if you could give this video a like. You can also subscribe to my channel as I post videos like this every Sunday and sometimes on Thursdays as well. Thanks for watching.